Hello, everyone. Welcome to December. Can you believe this year went so fast? I'm Kathy McBreen, and we're here today to talk a little bit about our monthly investor confidence index. And what we're going to focus on is how did the election impact the attitudes of these wealthy investors? I'm sure you won't be surprised, but it's actually kind of amazing overall. After we get finished talking about the election and the index, we're going to talk about our third quarter reports that talk about advisor expectations from different levels of wealth. And that's also interesting because it has to do with a lot of questions regarding some regulatory issues that we're all struggling with a little bit. Of course, we can't predict whether those will go away or not, but we can tell you what investors think about them. So I'm going to turn it over to our president, George Walper. Oh, one more thing. If you have any questions as we go through any of this, please type them on the screen. You should see a little box probably over on the right of your screen that you can type in your questions and send them to us. So I'm going to turn it over to George.
Thank you, and good afternoon, everyone. As Kathy said, we are going to talk about a number of different factors today, highlighted by our index, which we talk about every month. And then, as Kathy said, a little bit of the impact of the investing on wealthy investors from the election, and then how folks use advisors from our third quarter research. The index this month, which does reflect, of course, what's happened in the market throughout the month of November post the election, is trending up for both our overall affluent index, was up 5 points, as is our millionaire index. Now, for those of you that are not that familiar with our index, the affluent index measures each month investors with $500,000 of net worth, and the millionaire index, of course, looks at $1 million of investable assets net worth and above. We do this research every month. About the third week of the month, we publish the results, the first business day of the month. And so it's a pretty consistent measure of what wealthy Americans are thinking about on a number of different factors. This gives you a sense of the last 12 months. The blue line will always be millionaire. The orangish gold line will be the affluent investors. Traditionally, and we're back to this point again the last few months, we do see that the millionaires always are a little bit more optimistic about what they think. They tend to move in parallel. They tend to look not so much at 1 month, but we like to suggest people look at the last 3 or 4 months. And you can see prior to the election, things were trending downward, and in both cases, things are trending upward. And we're going to see a little bit of that in every one of our sub-indices coming up. This is a more detailed outlook at one of the key components, which is we ask investors, what do they think about their overall household outlook, how they feel about the economics of their family, investing, etc. This is always a key component, as is a similar component we'll look at here soon, which is the economy. But you can see the huge spike this past month post-election. It does, of course, relate to the market, but as you'll see when we look at a number of these different indices by political affiliation, it tells you a lot about sort of where the country continues to be split. The outlook that we just talked about is made up of a number of subcomponents: household income, the economy, people's perception of either the company they own's health or their employer's health, and then their overall household assets. You can see compared to last month, everything is trending upward. And essentially everything's trending upward or is even compared to a year ago in November of 2015. The economy is one that drives this particular component the most. It's one that we have watched, and for those of you that have joined us in the last many months, it's the one that is the most significantly impacted by people's political affiliation. We're going to dive into that in a little bit. We ask a series of questions every few months. This particular month, we asked a question not because it's the obvious question to ask, but because it just is up on the schedule, that what's the story in the news most affecting your economic outlook. And as much as we tried to get someone to respond to something other than political environment, it's all about the political environment, both the election, the results, what's happening post-election in terms of putting together a new government cabinet, etc. Here you have that same question that we look backwards about 6 quarters. You can see when we ask the question in any particular quarter, it tends to be the highest point, with the exception of going all the way back to November of 2015, it actually should say, where international problems were the primary issue more than political environment. We think, and it's important that your advisors tune into this every month, we ask folks what they're thinking about in terms of their investment intentions or interests for the next 6 months or so. And you're in traditional asset classes, equities, fixed income, short term, and real estate. You can see equities, not surprising given what's happened in the market, moved up, as did fixed income, with both an expectation of the market getting better and interest rates rising and a number of different short-term rates making significant changes in the past month. So we think this is what clients want to think about investing in. This is what they think they want to talk to their advisor about from an overall asset allocation standpoint. So let's look at a little bit of this relative to people's political affiliation. We started reporting on this in January of this year. And we've always asked folks what their affiliation is. We just never really have reported it publicly, but we thought this would be an interesting year to do that. It has been an interesting year for those of you that have joined us every month. But as I said earlier, when we look at the various indices by political party, you do see some differences. So throughout the next few pages, it gets a little bit confusing unless you think about the colors, red being Republican, blue being Democrat, and independent. And what I find interesting is you start seeing independents moving in similar trajectory lines as Republicans in the last few months. So the overall affluent index, you can see Republicans felt much better here in the last month. Democrats dropped. Independents continued to move upward. And the same thing for millionaire. What I find interesting about millionaire is look at the independent trend line, which since April has basically been trending upward, much more of a straight line, as opposed to the Democrat and Republican, which is going up and down in different directions from each other. I thought that was kind of an interesting impact on this particular chart. We said earlier that the key component is the overall household outlook. When we look at that by party, you see some interesting factors. You see differences by Republican and outlook, both for the overall and in the subcomponents. And you see independents tend to be right in the middle of these two parties. Household income, you see that. So then the economy, and this is one that has been the most significant difference throughout the year, where now we have Republicans at 57.5 in our scale and Democrats at a minus 24. Now, what's significant about that, you'll see in a little bit, is the trend line throughout the year in terms of how all three political affiliations have been responding to month-to-month tracking of this particular indice. And here you have it. The overall household outlook, you see that Democrats throughout the year were far more optimistic about their overall household outlook, their personal situation. Independents were typically in the middle or below both parties, but Republicans were trending below the Democrats pretty significant every month going back to the first of the year until the election results. And obviously this is paralleling a lot of other key trends we're seeing in various different components in the economy, in the stocks, in people's attitudes. But these are pretty dramatic switches based on political affiliation. You see it even in a more so when we look at people's outlook about the economy, where you see throughout the year Democrats were far more optimistic. Republicans were very pessimistic about the economy. And if you remember my comment a few minutes ago where the Democrats now are very pessimistic about their own economic outlook compared to the Republicans, and independents are trending up. This has been the one that has been the most significant difference throughout the year, and it's quite actually alarming that wealthy investors in this country who have similar wealth situations have this significant of a difference based on their political affiliation about the economy and what it looks like going forward. How folks are going to invest for the next 6 months to a year coming out of the election, you can see that as of right now, stocks, independents are the most optimistic from an equity standpoint, both individual issues and mutual funds. Bonds and fixed income are similar. And then not investing, people on the sidelines, continues to be one that we look at. It's one that we think is another measure. Even with the market being high, folks still have a fair amount of concern. At this point, more likely connected to the fact that they don't want to necessarily invest at what they might think is an all-time high, but may be the peak And so we'll see as we get to the end of the year with interest rates potentially increasing or being changed rather. Obviously, if they change, they go up. But more importantly, a number of tax changes potentially happening next year that might force individuals of this wealth level to make different investment and tax decisions in the month of December. So that could actually have some impact on this. So we looked at each of these asset classes, again, month by month by political affiliation. Kind of interesting that you now see that with the optimism for the Republicans, that they're not as optimistic as Democrats and independents relative to individual stocks, a little bit more similar in terms of mutual funds. The gap is not as significant, but that's just an interesting thing to look at relative to political affiliation. You look at fixed income and cash, where, again, it's month to month, the trends have been all over the place. Individual bonds, the Republicans and independents have met. They started off pretty far apart throughout the year, and now we're back to being the same at the end of November. And in terms of cash position, similar in terms, again, independent Republicans and Democrats being a little bit higher in terms of cash position. When we look at the last two asset classes that we track, bond mutual funds and real estate being where typically Republicans the last 6 months or so have been more optimistic about it. Fixed income has been all over the place month to month relative to comparing each political party. So you see that even though wealthy Americans on paper, when you look at wealth, you look at what their net worth is, you look at what they think about and worry about, you look at the advisor types they use, they do have a pretty significant month-to-month attitude swing when it comes to investing. So with that, I'll turn it over. If there aren't any questions, and feel free to just post questions, I'll turn it over to Kathy.
Thank you, George. I want to talk a little bit about some of the research that we did with investors in the third quarter of 2017, and these results that we're speaking about are really based upon our research with millionaires and the ultra high net worth. First of all, millionaires are those that we call that have from $1 to $5 million of net worth, and the ultra high net worth are those with $5 to $25 million of net worth. So first of all, 79% of millionaires use an advisor to some extent, and 84% of the ultra high net worth are using an advisor to some extent. What types of advisors are they using? Well, both, for the most case, are using a full service broker. After that, you can see the independent financial planners pop up for the millionaires, then the accountants, discount brokers, and investment managers. And under the ultra high net worth, you have their accountants and attorneys who sometimes are part of a team that are working together with the full service broker, as well as an online broker. And then the independent financial planner is fifth place. I will tell you that when we cut these different wealth segments by age, a lot of times that independent financial planner pops to the top a little bit more frequently with younger investors. So even though they use an advisor to some extent, how much of their assets do they actually let the advisor control? And this actually varies significantly with the levels of wealth to some extent, as well as with age. But as you can see, most individuals control almost half of their assets on their own. So this means that they might be using a discount brokerage account to control some of their assets, to make their own investments. It might mean the assets that are investment real estate. It might be corporate stock that they're controlling on their own. So half of their assets overall, they're controlling on their own. 32 to 35%, depending on their wealth level, are assets they feel they control, but they consult with an advisor about. Now, that may mean that the advisor actually is, quote, managing the assets or has them in the accounts that he or she feels that they're responsible for, but that individual feels that they are making the decisions about those assets. And finally, 19% for both groups really feel like they've turned that a percentage of their total assets over to an advisor, and they don't really make any decisions regarding it. What are the reasons that a person would change advisors or basically fire their advisor? Now, we always believe that the reason that somebody fires their advisor is because they're not getting good investment returns. If you go down to about the sixth one down, advisor is underperforming compared to the stock market. 40% of the ultra high net worth and 50%, well, roughly 39% of the millionaires feel like they would fire their advisor for that reason. But the biggest reason people fire their advisor is because they don't get back to them in a timely manner. And you would think that that would be sort of, business etiquette 101, but that's the primary reason that these investors will say they fired their advisor. And that includes both phone calls and emails. And the third reason that they'll fire their advisor is because they're not proactive in contacting me. So investors want to know if something's going on in the markets, that the advisor is going to reach out to them with something they should know. And this might actually be one of those times that they want their advisor to talk to them, because with the markets being at such a high, they want to know if there's something they should be doing, either selling or buying or thinking about impact that might happen the next year, or should they be deferring income? They have lots of questions right now with what's going on with the markets and with the new administration. What is the acceptable time frame to get back to your advisors? Now I have to apologize. I noticed on the key there's one color that is missing, and that is the green, which is immediately. So you can see that there are a small percentage, but a percentage nonetheless, that expect their advisor to get back to them right away, immediately, via either telephone or email. And that's the first color that you will see. But 27% of millionaires and 35% of the ultra high net worth want you to call them back within the first, 1 to 2 hours. And 20% of the millionaires and 27% of the ultra want you to email them back right away. And as you can see, overall, most of them want you to get back to them within the same day. There used to be a golden rule that you had to get back to them within the same day, and that's definitely anticipated with these investors. Now, the other thing that you might want to know is that when we cut this by age, younger investors expect the most timely responses. So if you wait 3 to 5 hours for a young person, you might be making them unhappy. So some of the other research that we've done shows that the younger you are, the more responsive you want your advisor to be. And now, finally, we asked investors, do they know what a fiduciary is? And can they define a fiduciary relationship? And those are the bars that you see represented on the right-hand side of the page. As you can see, they define a fiduciary multiple different ways. But a professional that's looking out for my client's best interest is overall probably the highest, especially with the Gen Xers and even the baby boomers and World War II generations. So sort of, the correct definition of a fiduciary relationship, as well as a legal or ethical relationship, those are the most popular answers. When we ask these same investors, do they believe their investors a fiduciary, you can see that 84% of millionaires and the same percentage of the ultra high net worth believe that their advisor is a fiduciary. Now reflect back upon the fact that most of them are using a full service broker as their advisor, and the reality is their advisor may not be truly a fiduciary. They may probably not have that type of a relationship, but in the eyes of the investor, that is the relationship that these investors already feel that they have with their advisor. As the regulations do or do not require them to define in the future what their relationship is, you may see a little bit of uncomfortable discussion that may happen with these investors who already think that you're a fiduciary if you're not. So it'll be interesting to see what happens. Of course, we don't know with the change of the administration, what's going to happen with this new rule. There are those who say that it's going to be repealed, and then there are others that are saying nothing's going to happen to it. So depending upon who you're listening to, your organization will be looking at it in different ways. But I think most people are assuming that it's still going to be a reality in April. I think I'll turn it back to George, and he can talk a little bit about the High Net Worth Insights newsletter.
So our index, as I mentioned earlier, is released result-wise 8 o'clock East Coast time, the first of the month. The index is embedded in our monthly newsletter, which is designed for advisors. All of this information plus the narrative on the index is provided each month, and then highlights from different research reports that we generate on a regular basis. Topics right now, of course, are the relationships with advisors that wealthy investors have. So it's a great tool for advisors to have, for providers to provide to their advisors, etc. If you'd like more information about it, feel free to email me at gwalper@spectrem.com or give us a call at 224-544-5350. Thanks very much for joining us at this month's webinar on our index, as well as, in the case, highlight from our advisor research. And we look forward to talking to you again next month. Thank you.